great success story. They went from 3.5 to 7 to 14 to 21.6. But what's happening is during the exit process, they needed a product profitability report. Well, the problem is, like most firms, they hadn't actually grown the back office. Their product sat in 3 databases. When they pulled that together, it's a $21.15 million revenue. When they went into their CRM, they pulled $21.3 million of sales. Well, 21.15, 21.3, 21.6. Well, when you're looking at an exit, you're telling a story. You're selling your story and the numbers. So it's a case of you don't know what you don't know. And that's why something like a scale path makes sense, because as a company, we've been through about 15 to 20 different scales. I think that's so far, right? We bring in the expertise that your head of finance just may not know, or your head of data may not know, because they were a business analyst 5 years ago. Now they're the head of data of a company that's 3 times the size, right? It's just bringing in the experts who have been there to help you, not to replace you, but just to help you grow. And everything worked. I'm like, what did you just do? He goes, oh, this is SQL. The pages 3 and page 4 are pulling from different tables. I was like, I got to learn this SQL thing, because you solved in 20 minutes what I was spending 2 days on. And that's what started my career down into data.
Behind every value creation plan, there's a data problem nobody wants to talk about. Fragmented systems, metrics nobody trusts, and decisions made on gut feel dressed up as analysis. Welcome to the PE Data Guy. Each week, host Graham Crawford talks to the operating partners, advisors, and practitioners who are doing the work inside portfolio companies. If you care about what actually drives returns in the mid-market, then you're in the right place. The PE Data Guy starts now. Greg Hood is a CPA and CMA who spent over 20 years as a finance executive across Canadian and US fintechs and financial services, including roles at Kunai, Paramount Commerce, and Qtrade, an online brokerage where his team won Most Innovative Finance Department. Greg has the distinction of being one of the first CPAs to hold the title of CDO. Along the way, he lived the exact problems that most PE-backed portfolio companies are still drowning in: fragmented data, disconnected finance stacks, and leadership teams making decisions on gut feel because the numbers are just not trustworthy enough to act on. Greg took that experience and built out SkySight Analytics, a Toronto-based consultancy that works with PE firms, sell-side M&A advisors, and high-growth companies to turn finance and data infrastructure into something that actually supports value creation, exit readiness, and data monetization. Greg and I operate in the same world. We see the same problems and often arrive at the same conclusion. The data layer in most mid-market PE portfolio companies is the single biggest constraint that nobody wants to budget for. So thanks for joining me, Greg. Great to have you on. Good friend, and thanks for coming on the show.
Oh, I'm super excited to be here. I love this topic, of course. You know me.
Yes. So we can talk for hours. For sure. Is there anything you'd add? That's quite a cool winding road of a career that you've had, with lots of really exciting stops along the way. Is there anything you'd add? Any favorite things you've worked on?
I say the very favorite thing I've worked on, of course, is all the finance data warehouses we built out. And we've seen the evolution of data. Like when I first did my first data warehouse, it was 2010. It was on-prem. The technology was completely different. And back then it was really weird for like, what's this finance guy doing with the data stuff?
But get away, go back to the finance team.
Get back to your spreadsheet, get back to Excel. But obviously over the last 16 years now, we've seen quite the evolution of where data's come and how much it actually impacts finance. And it's not just something that's siloed away in the IT department anymore.
Yeah, and finance is one of those areas where it's critical that it's right as well, of course. And I, don't want to date myself, but the same type of thing. Like I remember the first warehouses I was building, and we had to build a 6-week window into the start of the project plan to allow for the servers to be ordered from HP and then delivered on site and installed in a data center. So those were the days.
I remember walking into the room and, we had to make sure the air conditioner was working because we didn't want it to overheat and all that good stuff, right?
Oh, yeah, the size of the stack used to be taller than me, right, as well. It was, it was quite it was quite the thing. What do you think drew you to data? I mean, I've spent a career in data as well, and I remember when I was a kid, like, simulating soccer matches with my stuffed toys and building league tables all along the way. Like, I've always kind of been drawn to and had an affinity to it. Like, what do you think led you to the world of data?
Well, I started off I actually originally wanted to go into comp sci, but I kind of swapped over to go back over to business. But to date myself, I wrote my first piece of code back in 1981 on a Commodore 64. So I've already kind of had the affiliation for computers, but really I had an aha moment at work one day. We had these reports 10-page report. We had a number on page 3, a number on page 4, a number on page 5. And the third decimal point was different between pages 3 and 4, but was the same on the page 5. I
Mm.
was going crazy. I kept on trying. Like, I'm in a reading room. I've got highlighters. I've got like stuff on the whiteboard, and I became the crazy mad scientist in this room. Like 2 or 3 people came to join me. We're all trying like doing one penny entries into the accounting system to try to figure out why is this report, like what's wrong with it. So on day 3, some other guy came by us. He's like, "What are you guys working on?" So we explained to him. Kind of did one of these. Walked back to his desk. We sat at his desk for 20 minutes. He's like, "Check tonight," and everything worked. I'm like, "What did you just do?" He goes, "Oh, this is SQL. The pages 3 and page 4 are pulling from different tables." I was like, I got to learn this SQL thing because
Yes.
you solved in 20 minutes what I was spending 2 days on. And that's what started my career down into data.
Yeah, that guy knew where the well-governed tables were. For sure. Yeah, I love it. I love it. And again, I think we have similar answers here, but for you, like what led you into the world of working with PE and PE-backed companies?
So I came up to the big bank world. Spent the first like 6, 8 years in like big, large financial institutions. Great training arm. Loved my time there, but I also realized it wasn't me. So about 10 years of my career, I made a swap over into fintechs. Really found that mid-market love. And then from that point, just kept on realizing there's a lot of potential mid-market. Mid-market is traditionally like dirty data. The processes aren't quite as refined as you get like a bank, but you really have an opportunity to make an impact in the lower mid-market and mid-market. And from there, that led to 3 successful exits. So I kind of got bitten by the exit bug.
Ah, there you go. Yeah, understandable, and it's addictive stuff. That I'm sure, addictive stuff. I mean, you and I talked about it a couple of weeks back, but I love the clarity that comes when you're approaching any sort of liquidity event. Like the perceptions, the importance of perception gets swept away, the importance of politics gets swept away, and it's all becomes like, how are we sure that these are the right numbers, and how can we either now or in the future make them go up or make them
Yep.
go down if that cost numbers, of course. Yeah, so I love I feel like PE gets a bit of a bad rap sometimes because it comes in and clears away some of the safety blankets that organizations and leaders in organizations hold on to. The safety blanket of being able to override reality with perception, the safety blanket of, having built a reputation or career around a certain platform or a certain urban myth or legend, which may or may not be correct when the numbers are fully audited. So I can understand why people feel displaced and people get their noses put out of joint when PE comes to town. But there's a certain clarity about it that I enjoy.
No, absolutely. This is when like, you're under the microscope, but if I come from a finance background, we go through an audit every year, anyways, right? So we're used to being put on the microscope. But then it's not now just the numbers; it's your processes are under the microscope as well. Your reputation is at stake, and you may have, like, as you mentioned, you may have built this really great system or like this great spreadsheet that you're so proud of, and it runs like a third of this process. Well, PE doesn't care about that. PE cares. That's a risk. That's
Yeah,
a risk. How do we get rid of that risk? How do we actually turn that into a more efficient process so we can actually, get a better bottom line? That's what
yeah.
everyone cares about.
Or if
So
no one else knows how that spreadsheet works, then you are the risk,
yeah,
right?
exactly.
You're absolutely the risk. It's so you talked about the path like from finance to data consultancy. Like what and as you mentioned before, there's always additional rigor in the world of finance, and I have a background in financial services myself, so I'm familiar that when the cost of an error is a 8-figure regulatory fine, then there tends to be a bit more of a business case for investing in data quality and governance, for sure. What else did you learn from 20 years in finance that operating partners and PE firms and PE-backed companies are still missing?
Well, one thing, it's what I really find interesting is that nobody actually really audits the thing that makes the post plans work, which is the data layer. Like people look at the system, people look at the numbers. They don't actually look at that semantic layer that actually ties everything together. That's actually quite often missed during due diligence. So like why we do financial audits and financial ratios, and we look at we write this tech stack's out of date, this tech stack's great, this person is really knows their stuff. We don't actually look at what the data layer looks like and what the data quality, data governance from the data layer looks like, because that's what will actually eventually drive all the numbers.
Yeah, there's a bunch of opportunity and risk that that totally lives in there, and the other thing, I was talking with a friend of mine back in the UK about this. The other thing that actually automation can mask, and like modern data warehouses can mask things like models that need to be regulated, like credit risk models or financial models, or any sort of, and in the case of PE, like decision models, like how are you deciding what customers to go after, how are you deriving um, lifetime value or acquisition cost of customers, and all of these critical numbers to PE. Um, and as warehouses become increasingly automated, and our friend AI, and how long has it taken 9 minutes for AI to come up in a podcast? That's it's a new record. Historical tracking of that stuff is just not there, and I think I have friends who work in the reg space, and being able to understand exactly what decision you made and what the logic was behind it and what calculations happened under that. I've heard people say a layer of that's kind of being swept away with technology. Technology can bring a lot of automation and governance and correctness to data, but do you feel that there's also a risk of um, history and temporal views and other important things that are important being swept away?
There is that risk. Absolutely, there is that risk. We were working at a regulated firm, and we were seeing seeing more fraudulent transactions come through, and we were like, "Oh, great, our system's working. It's getting more. It's picking up more and more fraudulent transactions." They were false positives.
Right.
So we were actually costing the company 1% of their revenue because
Yeah.
we had 1% drift towards, oh, this is fraudulent transaction, so we're rejecting it. So we still need to have that, the human in the loop. Like, do these numbers still actually make sense? Yes, now we can process 17 fraudulent rules in under 1 second, but is it the output actually right?
Yeah, is it right though? Yeah. And how are you deciding? Yeah, because you're right. Yeah, those false positives turn into operational friction, right? Because someone has to then manually deal with each and every one of them. And
And then the client side, they're like, well, why am I getting like your system is rejecting some of my revenues, right? So the client's not happy because they're seeing their revenue go down because they're seeing less transactions go through that were actually legitimate transactions, but we had some model drift that was saying this looks like a fraudulent transaction that we weren't monitoring properly at the time.
yeah, and then the consumer trust comes into it, et cetera, et cetera. And it's interesting, and having dealt with, again, lived in very similar worlds to you. That's a really tricky line to walk, that, because obviously you want to err on the side of false positives rather than like missing
Yeah.
the ones that are actually fraud, because that as a customer experience is far more damaging than a false positive one. But it's a tricky line to walk. And as we said, like maintaining the logic and all the changes you make to that logic um, are really important. It's insufficient, right,
Yeah.
in a regulated world, to just have a GitHub style log of, oh, we changed it because we were getting too many false positives, and then here's the new version. Like, you need to understand what that old version is, what you were doing, what calculation you changed, all of that sort of stuff. And I think there's a lot of SaaS platforms, including those trying to get into kind of financial services space, getting spun up very quickly at the minute in AI, that are taking no care whatsoever.
No, no,
Um,
you definitely, like, that was a perfect example. Like, how a data mistake, which is no, it wasn't it was the better mistake because we weren't letting a fraudulent transaction go through, but it was costing over $1 million a year to the company. So
yeah,
data and finance tied at the hip, right?
absolutely. And yeah, another thing I'm familiar with, like 1% might not sound a lot to some companies, but if it's 1% of 10 million transactions, then suddenly you've got some major operational issues to deal with.
Yeah.
Tell me more about the award, the Most Innovative Finance Department Award. What does one have to do to win that? What was the dinner like at the awards ceremony? Like, tell me more.
So that was, that's going back a little bit time, when finance people are running their whole entire, like, I was acting chief data officer at the time for QTrade, and we had actually built a full multi-dimensional, multi-line of business finance data warehouse that was actually eventually expanded into an enterprise data warehouse. But the fact that we could pull analytics 10 different ways on 9 a.m. on the first business day of the month was absolutely crazy awesome, right? Like, we took a 2.5 day process and turned it down to under 2 hours, where our competitors were still copying and pasting spreadsheets to do commission reporting. We had a fully vetted, double checked 2.5 hour process, and that in the last hour and a half of it was just a manual intervention of just a human actually take a look at everything, make sure that the output was right. So, like, we had 5 lines of businesses, we had 3 different presidents involved in this. It was $100 million company all running right through this one little finance data warehouse. We had 90% of our revenues booked at 9 a.m. on business day one.
I love that. I love that. And actually, that metric you mentioned, if you're looking for hidden indicators of how good a company's data is, like how long it takes them to close month, close quarter, close year, from a financial perspective, is usually a pretty good barometer of what you're going to find in the other areas of the company.
Yeah. And that was exactly why we actually wrote our first finance data warehouse, was that we were a subsidiary of a larger organization, and they were giving us reports on the morning of business day 6, if we were lucky. And we were also paying $100,000 per year for these reports and paying $385 per hour for data mining. So we built one internally. Well, instead of having to wait on business day 6, now we have everything available at 9 a.m. on business day 1. We have a 3 business day close now instead of having to close on business day 8.
And that makes all the difference as well, like in terms of like any decisions that hang off the back of it, management reporting, so everyone understands how the company's going, especially in a PE-backed space as well. Like the investors are always keen to see. Yeah, fantastic. Bring it more into the recent past. So SkySight built something called ScalePath, right? Specifically to help PE-backed companies get their finance and data stacks in order. Like what do you typically find in one of these companies when you run them through ScalePath, and what does a typical finance data stack look like at a mid-market company?
So what often we find a lot of QuickBooks. People are very heavy in QuickBooks, and people are very heavy in spreadsheets. We usually find that 80 to 90% of the journal entries are being done manually, and it's a bunch of accountants in there getting reports from here, getting reports from there, copying and pasting. Like we saw people creating a pivot table that would then be created to create another pivot table. So a lot of macros. Like no, we would you take 3 spreadsheets, turn them to a spreadsheet, turn it to a pivot table, take that pivot table, turn it into another format to upload into an accounting system, then reconcile the accounting system, get back to the source system again.
Well, what could possibly go wrong?
So that's what we typically see is QuickBooks, a lot of Excel spreadsheets. So what we typically do is say, well, let's get out of QuickBooks, especially if you're a multi-entity, because usually in the mid-market PE back, you're going to become multi-entity, multi-currency. Let's get into a proper ERP. Now let's actually create a finance data warehouse, and it can live anywhere. It can live in AWS, Azure, Snowflake, Databricks. They all work for us, and let's automate this. There's this magical things called APIs that a lot of accountants don't know about. Kudos to them, like Campfire. Campfire is like an AI first ERP. Like they're actually helping automate the actual journal entry process within the whole entire system now. So we come in, we basically say, you can basically double your work and double your revenues and have no additional people need to be hired because you're just inefficient.
Yeah, I want to come back to a point you made in the middle of that there about Databricks, S3, Snowflake, etc. Like, I often find when I start with clients that they think that folks like you and I have a magical secret menu of BI tools that we can stitch together that will solve everybody's problems. And 99% of the time, my answer to that question is like, it really doesn't matter, right? Actually, like what matters more is getting a clear definition of what you're trying to do with the warehouse, what reports you want out of it, what decisions you're trying to make out of it. Like once we've got that sorted, unless there's some really complex ML that's going to take advantage of a cutting edge Databricks feature, or unless there's some huge amount of storage that's going to take advantage of Snowflake's ability to transition stuff across for cheaper compute, it doesn't matter. Yeah. Right? And usually none of those things are the case. None of those things are the case in the mid-market. And yeah,
it's not a technology tool issue. It's a process issue, is what most people don't realize. Like technology is not the silver bullet. It's the process that derives everything behind there and how you deliver it.
Yeah, no, absolutely the case. A lot of things being held together with tape, or as you say, like maybe QuickBooks is a good can be one of the better examples, rather than some of the stuff's on QuickBooks, some of the stuff's over here on this one, some of the stuff's over here, and like all things that are normal to find. And I think we should stop to say from our position of privilege here, like having worked at big companies, that this is a normal part of evolutionary growth in mid-market, right? This isn't mid-market people don't know what they're doing, or mid-market people like don't have the right idea. It's just the company starts from nothing often and has kind of built up and scaled because it's so damn successful. And it's more often a case I've found of like, okay, this used to work 3 years ago, or this used to work 5 years ago. This was perfectly acceptable, right? My business runs on QuickBooks. That's okay. Like I'm not dealing with 100 million transactions a month, so it's okay for me to be on QuickBooks. In the future, when I've got the world's biggest data consultancy in 2 years, Greg, then yeah, sure, maybe QuickBooks isn't going to cut it anymore. But like, it's very often nobody's at fault here. It's
No,
just that time and scale have overtaken data architecture, and it no longer meets the needs. Is typically what I'm seeing.
no, absolutely. Like we quite often see that the finance and data departments are one of the last ones to get addressed. Like sales is the first one that gets addressed because they're the ones that are scaling up. Then you have the product that's going along with sales because sales needs a product, and all that happens up there. Well, the behind the back office, behind the scenes, they're the last ones to get addressed. It's not, and it's just an evolution. It's just like you have it's a small pie, limited pie. Like how much money you're going to spend. Eventually, it catches up though, right? Because a lot of people say, "Oh, we're just going to fake it till you make it," right? Well, I always say that it's fake it till you break it, and if you break it, that's a
Yes,
lot more expensive, right? Like you can drop a NetSuite or you can drop Snowflake into a broken process, and all you get is more expensive broken process.
totally agree. Totally agree, and I've seen that a lot of times. So that, yeah, that's the key, like deciding the right time to make the decision. And again, there's the decisions to prioritize sales, marketing, product, like are completely rational and understandable and correct, right? Because those things go straight to the bottom line, and that's what gets companies on the radar P in the first place, that they've grown and scaled so successfully. It's just that data and, as you say, finance are more kind of horizontal enterprise investments that are the kind of rising tide that silently lift all the boats behind the scenes
Yeah.
without saying, spend whatever 5,000 on Snowflake this year and your revenue is going to go up 10%. Like it just doesn't, it doesn't necessarily work like that. There's a lot of risk mitigation that it offers and a lot of defense that comes from having a well-governed data, as well as all the opportunities that it unlocks.
No, absolutely. As you mentioned, it's no one's fault. Like, and quite often, like, no, we're talking portfolio companies of like private PE firms. Quite often Series A or Series B companies. Usually the VP of finance, or sometimes it's a head of analytics or like a head of finance. They've been in the company for 2, 3, 4 years. They've seen the company go from like 4 to 5 to $10 million, but they've never been through that process of going from $10 to $100 million. It's a case of you don't know what you don't know. And that's why something like a scale path makes sense because as a company, we've been through about 15 to 20 different scaling ups so far, right? Now
Yeah.
we bring in the expertise that your head of finance just may not know, or your head of data may not know because they were a business analyst 5 years ago. Now they're the head of data of a company that's 3 times the size, right?
Yes,
It's just
yes.
it's just bringing in the experts who have been there to help you, not to replace you, but just to help you grow.
Yeah. And like in terms of actual impacts, and again, we can only ever guess because there's so many variables that go into the equation, but like how much difference might a really good finance data stack versus a really kind of manual and lower quality one may actually make to an exit multiple?
So we have something we call the dirty data discount. It's usually worth about 10% of the valuation. We did a survey about 120, 122 different advisors, and kind of basically said, what if we gave you this data, we gave you this data, what would your valuation be? And we got anywhere between 1% discount and a 22% discount, and actually about 12 or 13% actually said we're just walking away. We won't even touch that deal.
It's just a no, yeah.
Yeah. So like if you think about it, in a lower mid market, that's $40 to $50 million deals. 10% discount, that's $4 odd million you're leaving on the table because you have this dirty data. Now, if you give me a minute, I'll explain what we mean by dirty data.
Yeah, go
Is
ahead.
a prime example was a SaaS company we're working with. No, they were on QuickBooks, $21.6 million of revenue. Great success story. They went from 3.5 to 7 to 14 to 21.6. Well, what's happening is during the exit process, they needed a product profitability report. Well, the problem is, like most firms, they hadn't actually grown the back office. Their product sat in 3 different databases. When they pulled that together, it said 21.15 million revenue. When they went into their CRM, they pulled $21.3 million of sales. Well,
Hmm.
21.15, 21.3, 21.6. Well, when you're looking at an exit, you're telling a story. You're selling your story and the numbers. Well, now the buy side's like, what's going on here? We don't believe your numbers. And as soon as you start losing that belief and the trust, down goes your valuation, right? So they came up and said, okay, no, we're going to actually give you 21.1, and there's a $500,000 discount, but it's not really $500,000 because it's a 5.8x on multiple. So you're talking about $2.8 million of lost revenue, of lost valuation, because you didn't have the correct reports in place and you couldn't prove your 21.6 million of revenue.
And even that's, I would say that's generous. They were lucky to get the 21.1 because, as you say, trust is more important than any of the three numbers, and it captures perfectly what I describe as the difference between management grade reporting and investor grade reporting. So for management grade, like, okay, year to date we're on 21.3/21.1, 21.6. Either way, like that's 7 million higher than it was last year, so I feel really good about it, and we can all like go about our jobs, leading this company, and feel good about ourselves. But with investors, it raises, as you say, that important question of trust. And that's why I think the 21.1 is generous, because the other approach they could take is like, well, rather than believe the lowest number, we could just choose to not believe any of the numbers, right? And rather than giving you a pass and giving you 3 months to work out what's going on, as you say, the outcome might actually be more than the multi-million discount. It might just be, okay, well, we'll go find another company, because people are getting more and more selective with the hold periods lengthening. There's competition for deals around as well, of course, but people are getting more and more selective with the hold periods lengthening, and it's easier to walk away and find a company who's got numbers you can trust.
Now the good news story about all that was that we came in, we actually wrote the finance data warehouse and applied our scale path methodology, and the actual number was 21.52 million. So we
Oh, there
went
you go.
back and we restated QuickBooks to be 21.52, and we gave the buy side 6 different reports, slice and dice by any different views of the world that all tied back to 21.52. So we actually ended up adding back over $2 million of valuation. No, this company was real lucky that the buy side was gave them the couple of months to come back in here and fix everything. It could have either been a dead deal in that moment.
Yeah, that's rare patience. Well, I hope they bought you a nice dinner.
This they did.
Yeah, that was they're very nice. Yeah, I love it. The my guest last week was talking a lot about how the old playbooks are not working anymore in private equity, and how data is an increasingly important layer, because I think some of the cliched old patterns of like, I'm going to buy 10 chiropractors and the operational efficiency will be inevitable because I'm rolling them up, and then because me and my buddies are smart and we'll dispense some executive wisdom every quarter at the board meeting, our success is all but assured, right? And playbooks like that aren't working anymore. Like we talked about, hold times are lengthening, and I'm certainly seeing data become a more and more important factor in not only monitoring value creation, but diligence in the first place. Like, they want that extra layer of knowledge to make the right choices when they're buying.
Yeah, absolutely. We're seeing the same thing. Like the data rooms have gone from 25 to 30 documents now. Like last data room I worked on was 306 items. So like they're becoming more and more diligent, and they're wanting more. Like now you need your cohort analysis, but not just by time period. You need it by region, by client type, by client size. Like you need 4 or 5 different cohorts to now analyze, by segment, by country. Like it's you
Acquisition
need
channel. There's another
acquisition.
one.
Yeah, like
They're endless.
it is absolutely endless. Like no, and then if there's gaps in there, the inconsistencies of data, it becomes a really big thing now, because it's not like, hey, we don't and you don't get a week to produce a report anymore. The buyers are expecting to see that in the data room, not like they don't want to have to ask for it 2 months later and then wait a week or two to get into there. You need to have that ready as a data room prep before you actually even get into the due diligence. And now we're actually even seeing some really interesting things where you can actually start to query against the data room itself.
Oh, right. Okay. How do you set that up? Do you push that into a model and then run NLP queries on the model, or are you creating
Yeah,
some sort of structure and structuring it?
yeah. So there's some data rooms out there that are, it's not our data room. It's like someone else's data room, but they're basically creating like MLP models that sit on top of their data room. So when you upload the documents, it says, "Oh, okay, I understand what this document is. I understand what this document is." And so if you ask them, can you show me what the revenue is across these 3 documents? And it would actually tell you whether it's consistent or not. And the buy side is using that against the sell side.
Oh, I love that. I love that.
So AI is hitting the data rooms now as well.
Incredible. Well, no, it's no surprise to me to see it continue its conquest of the world, used in the right places, and in the right way. Finance is an interesting place, right? It's great for assessing things or comparing things. I think the risk that people need to watch out for, of course, is like, if an AI model feels like it's got permission to fill in the gaps, right? If for example, if it sees the 21.1, 21.3, 21.5, like, is it going to say, well, I'll just take an average and we'll call it
Yeah.
21.3 and we'll talk authoritatively on it in my response, because I haven't been told specifically to call it out. So there's a bit of model management needs to happen, but no surprise to me to see AI coming in. And I talked to a few people about this week. As with anything in the news, right? Everything goes to the ends of the spectrum, right? So you hear people say don't know if you saw the Matt Schumer essay last week called "Something Big Is Happening." I'll link it in the comments, but look it up. But it's a very it did well because it places fear, uncertainty, and doubt in people. And basically, he was saying we're at a moment with AI that's basically like we were when we first heard about COVID. Of like, oh, it's no big deal, whatever, a new virus, like just like bird flu that we had before, whatever, it'll blow over. And then 3 weeks later, our entire lives had changed and turned upside down in a way that we as human beings are incapable of fathoming that amount of change on that amount of time. So he was arguing that we're at that tipping point now. So that's on one end, and then on the other end, you get this AI is useless. I have to spell strawberry or cut the R's in strawberry, and it got one thing wrong. I set a trap for it and failed. Therefore, the entire technology is useless, right? And you hear these two like camps at the opposite end of the spectrum arguing with each other, but the truth is somewhere in the middle. Right? And you've seen AI in high stakes scenario, like a data room on an acquisition is a high stakes scenario, I would say, from a business perspective. And of course, there's been loads in the news this week about the Anthropic stopping the Pentagon from using Claude for some things that they'd like to use it for. Definitely a high stakes scenarios going on there. Like, where do you think the truth lies, Greg? In terms of, like, where are we at now? If it's 0, AI is useless. 10, the robots are going to take over the world and nobody has to work tomorrow. Like, where do you think we're at?
Like we are, like as Sky said, we firmly believe we're in the 7 range. Like we're actually calling AI just like our business partner now. So Claude released their Excel module not a week or two ago, and it's changing the FP&A world. Like I played around with it, about 3 different models out of it so far. Another one, my colleague Paul Burnhurst, FP&A guy, LinkedIn, really great guy to follow. He's done a bit full on test on it as well, and it's gone from a year and a half ago, its models were crap. Now it's intermediate to senior analyst level. Like it still needs to review. It still makes a couple of small mistakes, but it can actually explain to you what its logic is and why it's building it that way.
Right.
So like what used to take 2 days now is 2 hours in Excel using Claude. Like so, it's definitely what we call the business partner now. And like if anyone is still sitting there coding one line by line by line by line, they're getting behind the times.
Yeah, they're getting left behind for sure. You know, a couple examples. A friend of mine, his son just left X. He'd been working on Grok as a software engineer, and he basically said that he told his dad that he was bored because he was no longer writing any code. He was mainly just reviewing code because the recursive loops had got so good that the model was basically writing its next version by itself, largely. So I think a lot of effort has gone in the software engineering space as well, for sure. Another example I've had this battle with like creating a personal CRM. Like Facebook used to be amazing for reminding me of when my friends and family's birthdays were, but they put so many layers in the way, and then like they want to turn on notifications and send adverts to me, and it just became a nightmare. Personal CRM products were running like $50 a month as a SaaS platform. I was like, ugh. So I sat with Cloud Code in an hour. It took my Excel spreadsheet that I exported from one of the SaaS products and made like a personal CRM for me that I just kick up once a week. Check for birthdays. It reminds me. I've got personalized settings where I can like snooze reminders for a custom number of days and whatever else. It's like having seen it in action at its best. It's scary. And as my friend reminded me, whose son worked on Grok, what we've got is 6 to 12 months behind what those guys have got.
Yeah.
So
But no,
yeah, it's the progress is exponential for sure.
having said that, here's a negative side of it, right? So just we were working on a scale path client, and we, out of curiosity, we automize the data and put ask Claude, ask ChatGPT, ask Gemini, what would your recommendation on this scenario be? And so we fed a P&L balance sheet in. And they came back and said, oh, this client needs to go to like a NetSuite. They have 17 legal entities. No, they didn't. It was actually a single legal entity, single currency. They had 17 related party transactions, which was the shareholders. It misread the chart of accounts as each payable as a separate legal entity. So I thought it was a 17 legal entity. So they was recommending spending $89,000 on NetSuite when the problem wasn't QuickBooks. The problem was all the information going into QuickBooks, not QuickBooks itself. The $225 per month subscription to NetSuite to QuickBooks was all they needed, not a $90,000. But if you listen to Claude, he would have said, hey, you need to spend $90,000 on NetSuite.
Yeah, that's interesting, and it helps catch it when it explains its logic for sure. And I've been playing a lot with Cortex code on Snowflake, um, and that's very good, and I think notably better than Claude and GPT at explaining what it's doing along the way. So Cortex basically gives you an NLP front end interface. I think it's powered by Anthropic actually. I think it's got Opus 4.6 sitting under it. Um, but it actually says, oh, the user asked an ambiguous question. So sometimes it will come back and ask you, but other times it will say, I'm making this assumption because XYZ, and I looked at the data and I think they mean this. And it's line by line will explain to you every assumption that's made along the way. And I think increasingly that's, especially for higher stakes things like we've talked about, that's an important feature for a model to have.
But like the one thing that we're seeing as we kind of get into some of these M&A discussions now is that, we're seeing boards ask, is our data clean enough to use? Like, there's not a board meeting I've been to as an observer or as a member that no one's asked that question, right? Well, that's kind of you're in now to get a budget for a conversation that you never had before.
Yeah, it's critical, and that's where the competitive advantage lies. Because in the tool itself, like as it ships or as it's available on the web, it's no competitive advantage because everyone else has got it, right? It's if you don't have first party data or high quality data about your business or your customers, then there's no competitive advantage there for you to eke out because everyone else can use it to write marketing copy and all the other things that you might do as a business.
Yeah. Like there's like SaaS and fintech are under extreme pressure right now. And you have to be very careful that the vibe coding you do, that's not a production ready product, right? Like that's just vibe coding that gets you to an MVP. It's a great thing.
Works in my personal CRM, doesn't work for a bank.
Yeah. You're not gonna run $100 million company off of vibe coding and pass regulatory examinations.
No, absolutely not. And ultimately, and correctly as well, I would say with reg exams, you could vibe code an AI substitute as much as you like, but there still needs to be a person whose name is on the block for a reg submission, right? And if that person's smart, they're not going to outsource that to a model, especially one that they don't know, they can't track and have full history over what it's doing.
Like at the bottom of the balance sheet, the audited financial statements, there's a signature on the bottom of the audited financial statement saying this was reviewed by person X, right? And if that's wrong, there's fiduciary duties and criminal charges can be brought against you against all this stuff now. So you can't just go blindly.
Yeah, peeps got to be careful. Speaking of opportunities, like you offer data monetization as a service, and this is no stranger to me. This idea that first party data becomes valuable, and potentially even more so, actually, given what we just talked about with AI, that proprietary data could be more important. So you help companies figure out whether the data actually could be an asset that they could sell, which I'm sure is a novel thing to most mid-market companies. Like what sort of situations does that make sense in?
So what it comes down to is like the two biggest buyers of data are academia and PE. They're the ones who buy the data.
Yeah.
Because how many universities out there, how much research are universities always doing? Like there's data monetization libraries just on like marketplaces just for academia. What makes your data more unique? The more unique it is, the more it's worth. But if it's more unique, it's less tested. So less tested makes it worth less. So there's kind of that dynamic pull that everybody wants to have the different data point, especially in PE and like hedge funds, the analysts, they want this unique data point, but they need to be able to trust it.
Right.
So it comes back down to what's your internal data quality? Like what, if you don't have a good data quality to go publish it, don't even bother because you are then on the hook for the quality of this data. There are
Absolutely.
ramifications having wrong data, but some things that we had one company come to us like, oh, I think we can make probably $1 million a year off our data. We looked at it. I'm like, so you are 13th in your marketplace. You are 1/10 the size of your largest competitor, and your data is no different than your competitors. What would make yours worth $1 million and not theirs?
Good questions.
No answer. So that's a case like, no, you don't want to, like you're going to spend 50, 70, 80, $100,000 doing all this. Your return's probably going to be 50 to 80, $100,000. Another one was like we had like from farmer data. So we were able to mask from farmer data. Well, that farmer data was worth a lot of money. It was an $800,000 data set.
Is this like who's using pharmaceutical products or how they're performing in testing or
It
in
was
the wild?
it was who's using pharma products. So it was basically like a lot of drugstore data across Canada.
Right.
So we could tell you that like by very very high level that in this city, here are the top five drugs in the 20 to 50 being sold at these drugstores between the ages of 20 and 30, between 30 and 40.
There's my mind jumps immediately to GLP-1s and the huge demand there must be for that data right now because there's a big market out there, and I think they've got pills now, haven't they, as well as the having to inject yourself in the stomach things.
Yeah, there. So it's all about like like how unique is your data set and how trustworthy your data set. Those are two things that will drive your value.
Yeah, no, absolutely. And to clarify, I'm not a user of Ozempic, but I'm just aware of what a hot market is now and what big
Yeah.
margins are available in there. So if I think about those new to market folks who've got the GLP-1 pills, for example, like to them, knowing the regions of Canada and the type of people who are buying GLP-1s is incredibly valuable.
Yeah. So there's of course when you're also going through the whole entire data monetization, you have to look at hashing and anonymizing your data because there's some data you cannot sell, right? There's also the PII, GDPR, HIPAA, like where, but depending which region you're in, you have to really follow all these privacy regulations. You have to make sure that nothing that you sell can come back to the user.
Yeah, there was an example last year of location data. I think people who were able to um, through not always 100% ethical means, like get apps installed on people's phones or whatever, so they could track their location, and they had some demographic information. So they had basically geo information down to the level of like a block or a building, even like where people were going, which includes, of course, people who are going to jails, people who are going to doctor surgeries, people who are going to abortion clinics, and other such like sensitive subjects. And it was the government always interests me because the government like clamped down on this. Obviously, like you can't sell this stuff. Like this is not okay. Like you can't sell
Yeah.
it. And then they actually gave out a huge fine, but tempered the fine and said this is only allowed if you're giving the data to us.
But this
So
also leads to another interesting discussion about, interesting depending if you're a CPA or not.
yeah,
But right now, from a balance sheet and finance perspective, data is worth $0 on your balance sheet. Data is not considered technically an asset under accounting rules.
right.
I am of the personal opinion. I've been trying to argue with the regulators on this, the accounting standards, that it falls under an intangible asset. Like if you have such things as goodwill, which is the amount you pay over for a company, if that's an intangible asset, why can data not be considered an
Mm.
actual value? How do you value it? Like, there's like a lot of people have done some work on like how do you value it? Is it if you sell it for $800,000, isn't it worth $800,000 on your balance sheet now? If you have a data breach, what happens to the data breach? You get sued for millions and millions of dollars.
Yeah, yeah.
How do you sue on a worthless asset?
Yeah, that's interesting.
But
I,
and people say that you're getting sued because of damages, but damages mean that it was valuable in the first place. How
of
can something
yeah,
worth?
otherwise it wouldn't have been damaging to get it out. Yeah.
Yeah, so by trade, accountants are very slow moving. Hence why they're the last ones to adopt the AI, when the last ones to get off Excel spreadsheets. But it's just an interesting dynamic. Like technically speaking, from a corporate perspective, data is worth $0 on a balance sheet.
So pulling from your CPA knowledge, which far outstrips mine, what what other sorts of assets are intangible assets, like intellectual property, for example? Is
Yeah,
that
so
one?
yeah, so it's all under the IP rules. So like you have a patent. A patent can actually be considered a valuable asset, right? Like people sell patents for millions and millions of dollars. People sell data. So like no, it's anything that it's an intangible asset. Like there are there are many things out there, but data is just not one of them. So it's an interesting conversation that's been going on for I'd say about 8 years now. That we have made absolutely probably not sure to say about 10% gain on the accounting society on this argument so far. But
Well,
now because now you can't run AI without your data. So like once again, how is data not valuable
I mean, we
from
just
a
spoke about how data is the thing which turns AI from a tool that everyone has into a competitive advantage, right? So how can we say that's not valuable?
yeah, so I'm really I would say excited, but kind of I don't want to use the word accounting and exciting in the same sentence here. But really interested to see how the accounting societies start to value data in the future.
Well, I'm down for it. And if you ever want an objective witness statement, Greg, I'm here for you. I'll take the stand for you. Don't worry. Say the word. Say the word. So one last thing, I just want to get into patterns, like particularly patterns that you might see repeat across PE-backed companies and PE portfolios. Like, what are you? We're looking at largely the same companies from slightly different angles. Like, what are some of the patterns that keep showing up, regardless of vertical, regardless of the size of the fund or the company? What do you keep seeing?
Well, I'll say something like what we refer to, the 100-day tech mistake, where like operating partners scope systems work before they actually understand the process underneath. Hey, oh, we need a Snowflake, we need a Databricks to fix this. That once again, we talked about this earlier. Like you can dump NetSuite into a broken process, and you just get a more expensive broken process, right?
Yeah, why not get them Palantir? Let's go all the way.
Yeah. They don't, they're not paying attention to the data layer. Like, hey, 21.6, 21.1. Everyone's like, oh, it's close enough. But close enough is good enough for now until it's not, right? Like you don't want to be in a position where you're starting to do this, like trying to cleanse all this stuff 3 months before an exit. This is a 12, 18, 24 month time frame. Like you want to get in front of it that way when you go into diligence and go into it, because as PE, we don't want to have 7 and 10-year-old periods. We want to get out for faster than that.
Yeah, of course.
Doing it at the last 11th hour doesn't do anyone any favors. So these are the kind of the same mistakes that we keep seeing, is that people put it off to the end. People start just replacing tech without understanding the process, not realizing it's a process that's broken, not necessarily the tech.
Yeah, and it can be even more dangerous, I've found, because if you fix sword like that, then even if you put a great model in or great traceability and governance in going forward, you still have to fix all the historicals, right? You can't just say, oh, our data's wonderful since the day that we put Snowflake or Databricks in. Or just like, these are not the droids you're looking for everything up until that point. Like, that doesn't work, does it?
No. And I would say no, you do some of the same work that we do. Like we basically come in as data consultants, right? But it becomes what we call the adversarial consultant problem. It's how you frame the engagement. It's like we're not here to point fingers or but not auditors. We're actually trying to make your life easier and better and make us all more money here.
Yes.
So the way the engagement model and the way the operating partners present a data consultancy firm matters as well.
Yeah, is that part of the old playbook not working anymore?
That's 100%
thing, do you
part
think?
of it. Yeah. No, you can't just get and say we're bringing this person in and they're going to fix it. That hard approach isn't working anymore, because what's going to happen is people get their backs up against the wall, and finance teams like auditors are going to try to hide things. And if they try to hide it, then it's never going to get fixed.
Yeah, we're playing a largely similar game, and for me, like it's so important that psychological safety's in there going in for the existing employees of the portco, because if it's not, you don't get the quality information that you need to be able to make good recommendations.
No, what we're seeing, like there is a real gap in the market between financial diligence rigor and data diligence rigor, and we're starting to feel it. We're really starting to feel it.
Yep. Well, we're both going to be busy. That's the actual conclusion to draw from that. And with that, like, time has flown by so fast.
Yeah.
So fast, Greg. I've already enjoyed our previous conversation so much, and we'll continue to enjoy more in the future, I am sure. But for now, thanks for coming on. For those listening who want to find you, want to find SkySight and dig a bit more into the type of things that you've been talking about, like where are the right places on the internet to go and find that stuff?
Greg Hood, CPA CMA on LinkedIn, or www.skysightanalytics.com.
Perfect. Great domain name. Great podcast episode. Thanks so much for coming on, Greg. I appreciate you.
Thank you so much. It was great to be here.
All right. Take care. Bye.
Thanks for listening to the PE Data Guy, the place where private equity meets data. Please forward this episode to your favorite private equity friend. Thanks for listening. See you next time.